everyone. This is Shubhankar Chakraborty from American Academy of Financial Management. We have been getting quite a few queries, and the third query that we are dealing with today is this: how do absolute return and relative return provide different perspective on investment performance? And the question was, can you discuss the advantage and limitation of each measure in evaluating success of an investment strategy or portfolio? All right. Now, before we go to the discussion part, let's understand what is absolute return. Absolute return basically focuses on the total return that is generated by the investment strategy or portfolio. This is regardless of what the benchmark is doing, what the market is doing, what is the market scenario, and how volatile it is. It is not considering any of it. It is just measuring the profit or loss in monetary terms. हमने 100 रुपया इन्वेस्ट किया, वो 110 हुआ, 105 हुआ या 95 हुआ, यही हमें देखना है. That is absolute return. I do not need to understand अगर वो 110 हुआ तो क्यों 110 हुआ and दूसरा इन्वेस्टमेंट उससे बेटर हुआ कि नहीं, वो हम एब्सोल्यूट रिटर्न पे कैलकुलेट नहीं करते, फोकस नहीं करते. So that is absolute return. Absolute return, if I use this to use this as a measure to analyze or estimate success or failure of an investment strategy, then what would be my advantage? The advantage is, it gives you a straightforward profit or loss statement. It is independent of market condition. Whether market is bad, good, or ugly, you don't need to understand. Whatever is your return is your return. It reflects the actual loss or gain. So whether you earned better than someone is not your focus here. आपने profit किया या loss किया, ये बता देता है बस. And that is the advantage of absolute return. You really don't need to worry about how it is faring compared to its peers and all. And emphasizes on risk management. आपको दूसरे से कितना लॉस करना है, मतलब दूसरे के कंपैरिजन में क्या लॉस हुआ वो देखना नहीं है. अगर आपके रिस्क एपेटाइट ऐसा है कि you cannot take loss, so for you principal protection is important. So an absolute return of 2% should make you happy. An absolute return of 4% should make you happy because you haven't lost principal. So that is where risk management comes into picture. It emphasizes on risk management. Now it has got limitations. The limitation is market का context ये ignore करता है. So but that's an important thing. जो हमने बोला कि that is an advantage. It is your return is independent of market condition. But absolute return ignores the market context. And if you are investing in market, it is obvious that you cannot ignore the market movements, the market context. And let's say you are investing and you are generating a return of 10%. And during that period of time, other investments have generated returns of 20%. So technically you are at loss, because if market has generated a return of 20%, then your other factors, like say for example inflation. Why do you invest? You invest so that you you can get your money grows more than inflation. So that's the reason why you invest, so that your real return is always positive. So we are not getting too much detail into that. But then आपका investment यही होना चाहिए कि अगर आज मैं 100 रुपया invest कर रहा हूँ, तो कल के डेट में 100 रुपये से आज जो खरीद सकता हूँ वो कल अगर 106 रुपये बन जाएगा, तो मेरा इन्वेस्टमेंट का रिटर्न ऐसा होना चाहिए कि वो 6 रुपये से ज्यादा हो. That is only then only I'll be at profit. तो अगर ऐसा है कि अगर मार्केट ने let's say 20% रिटर्न जनरेट किया है, तो it will have an impact on your inflation, and ultimately by generating 10% return you will be at loss, and that is something which absolute return doesn't focus on. And that is the reason why we consider that to be a limitation of absolute return, because इसको benchmark से compare नहीं करता है और market context को ये ignore करता है. So that is why absolute return, those are the limitations of absolute return. Now that's the reason perhaps we use relative return. right? And relative return, what it does, it compares the performance of an investment strategy or a portfolio to a benchmark or relative market index. So अगर आपने एक मिड कैप फंड ले लिया, एक मिड कैप म्यूचुअल फंड ले लिया, तो it will have a benchmark which you will it will be getting compared with, and based on that we will see whether it has generated more return or less return. If let's say you are taking two mid cap funds or two large cap funds, for example, so that's what we say peer comparison. So one would do better than the other, and you would always want to be investing in a better fund than the other one, because in the same market condition this one has done better. So that way it has generated an excess return, and that is what relative return focuses on. It doesn't focus on what is the absolute return. So let's say, for example, if I have to take example of the present times, in last 1 year equity market has given a very nominal return, right? It has given a return of, let's say, around 3 to 4%, 5% tops, right? Now, in that situation, you made a return of, this is what I'm talking about, index. And at that situation, you made a return of, let's say, 7% or 8%, which is quite less compared to your expectation, maybe. Or maybe your inflation at some point was 6.5%, 7%, and your return was around 6%. So that was technically, you would say that real rate of return to mera negative raha. So I was at loss. But then in relative return, you should be quite happy with that, because 6% return is more than what your benchmark has generated, which is 3 to 4%. So that is relative return, which we that is how we calculate alpha. Alpha 2% alpha generate होती है. Although absolute return ज़्यादा नहीं है, लेकिन relative return में it is better than the benchmark. Now उसका advantage क्या है? Benchmark comparison मिल जाता है. It actually helps you to evaluate the skill and performance of the fund or the fund manager, and it considers the market context. So that is the advantage. It stays well within the market, and it gives you a reflection of where the market is. If the market is bad, it's going to give you a return which is related to that. So let's say equity funds have not performed in last 1 or 2 years because the market was bad. So it actually gives you the context that market is bad, isliye ye kharab hua, right? So that is the advantage of relative return. However, the limitation is it ignores the actual loss or gain. So let's say if market agar 2% ऊपर गया, मानो market 10% नीचे होगा, and आपका relative return आपका fund ने 5% का loss दिखाया, so your relative return is positive, right? You have fared better than the market, but then ultimately it's a loss, right? 100 rupees you have invested, market has gone down by 10%, and your fund value is 95, right? You can be happy about the fact that market तो 10% नीचे गया, मेरा तो 5% में नुकसान हुआ, लेकिन 5% का नुकसान तो हुआ ना. So that is where the limitations of relative return comes into picture, if I have to use that as a measure or a tool. And the other thing is selection of benchmark. So if you, let's say you are comparing a nifty a large cap fund with nifty 500, so that is not the right comparison. Or if you're comparing a mid cap or a small cap fund with nifty 50, that is not the right comparison. So choosing the right benchmark is extremely important in this case when it comes to relative return. Otherwise, your analysis will be wrong, right? If you don't have the right kind of benchmark, so what the result that you will get will be very, very misleading, right? So that is the reason why it is important to have the right benchmark as your selection criteria. Right. So by and large, absolute return gives you actual performance, and relative return gives you performance compared to peers or benchmark. So through this today, we understood that how relative return and absolute return changes the perspective of investment performances, and we just gave you the advantages and disadvantages or limitations of these two. Hope you like this. Thank you, and keep sharing your queries so that we can answer them. Thank you.